Good morning. It is Saturday, March 2nd, 2024. February is in the book. All right, let's jump right into it. Let's open with BTC holding strong above 60. There's a fairly large zone of absorption that BTC need to absorb as far as, sellers. And until that is done, if it can be done, we stay here until one way or the other. Either the buyer dry up, then we go below. I have a stop in at 60, just below 60, because I don't want to get stopped out on a fast wick below 60 and then bounce back, right? So it's just below 60 in the 59.5 range, and for the IBIT equivalent. And then if it can absorb, so if the buyer dry up, then we go below. If the seller dry up, then we can test the all-time high, right? That's it. That's simple. Don't have to overthink. TLT. All right. So economic data is still mixed, right? But for whatever reason, I don't even care at this point, because until I see data that is bad consistently on a daily basis, then you're not going to see a sustainable move into the resistance zone up here in the 98 to 100. All right. So for now, I'm not going to complain. It's basing. It spent a lot of time. I talked for over 2 weeks, right? Where I keep saying, if you don't have TLT exposure, if you want to add to TLT, 92-ish is 92 to 93. In this zone here is the buy zone, right? I talk about selling puts, either 91, yeah. Not much else to add there, right? Okay, let's take a look at all the indices. Crazy. I'm tempted to reload, restock my DI short. Not yet. I have an SPY short already, so I try not to be too overexposed on a short bet, right? So for now, I do have an SPY short. So for DIA, riding the channel high and the 20 MA is is riding along, right? So I'm not too crazy about shorting the DIA unless the 20 is broken, right? It's been a long time. The last time it tested the 20 was way back mid-January. It didn't stay down for very long. Okay, it did not stay down for very long. But the next time it tests, I think we can go down to the 50, right? So there's a potential 2% move. So it's not all that big. That's why I didn't really short it, because even though, yes, it's testing the upper channel, can it break? If it does break, last time, not for too long, right? So not very attractive as far as I wouldn't chase it here. I wouldn't short it here either. SPY, I shorted. It's the losing trade so far as my bear put spread, but I have until the end of March, right? The end of the month, March 28th. So I got plenty of time. So for now, yeah, nothing to do. Okay, if you have SPY on the long side, trim is the smart thing to do. It's riding the channel high here. It has been a crazy ride for the past 3 months. Come on, right? Since 4 months, since November, since the end of October. Amazing, amazing. You get 100 points. Yes, 100 point. SPY was 413. It's 100 point. That's a 20% return. 25. It's insane. It's like 23% return or something like that since the October low. Come on, right? Come on. Gotta be kidding me, right? Gotta be kidding me. QQQ. Yeah, I've been saying for a while. It's can't short it. Okay, I can't. I barely can short SMH, let alone the QQQ. Too strong, right? There's better places to short. Can the QQQ go down? Yes, but it's too hard to time the right spot, especially when you're playing with options. So I can't do it. I wouldn't. If you can do it, good luck. I can't do it. I want to see a break, and right now we haven't seen a break. And just like the SPY, it's been an insane run since the end of October. Literally another 100 point from 342. Insane, right? Insane. 4 months, 23 to 24% return. Yeah, impressive and insane at the same time. All right, so yeah, congratulations if you're long. Max 7. Well, speaking of Max 7, let's talk about Max 7. I don't think you can call it Max 7 anymore. I call it the Fantastic Four. All right. First of all, Apple ugly. That's not Mac. There's no Mac here. Okay. Now, for those that follow me on the chat group, yes, I got stopped out 180 ish. That was my stop. I watched the option play, and I thought, yeah, I thought for sure they're gonna push it. Okay, they're gonna push it down to the 177.5, and they did. The option action was insane. The volume was insane all day long. But I thought, okay, if you want to play, so I went long. I even sold 172.5 naked put, and it was the right trade. The right trade because it bounced. Okay, now does it mean that Apple is safe? No, 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 no. Even though I bought, there will be a tight stop. Okay, yes, my average is in the 178 ish. So it's making money. It's profit, right? But I will have a very tight stop. Trust me, it would not. I will not let this thing fall out of the zone, the buy zone. Okay, I will take the L there. But for now, it's making money, and depending on what happened Monday, would I sell it in the 181 and above? Yeah, I would sell it. If Apple get anywhere near 183, I'm out. Okay, for now. Uh, it's a very weak stock. Okay, it's not healthy. It's not a healthy looking stock. The chart is not healthy. So that's one of the Max 7 that is gone. So you have Super 6. Okay, so Max 7 gone. Super 6 is there a Super 6? Let's take a look at Amazon. Looking good, riding high, all-time high. Scary. All right, I don't think I have anything now. I'm pretty sure I'm out of Amazon for now, but riding for all-time high. I'm not sure what this line is up there. What is that line? It gotta be, oh, that's the all-time high. My goodness. Okay. Sometime when it's a random line, I don't know where that come from, but that's the all-time high back. My goodness, going back 3 years. Yeah. The pre-split. Okay, until the stock split announced, and then it took the dive. Oh my, impressive, impressive. Double. It's a double. Okay, if you buy, you could have double. But yeah, can it get up there? Maybe. Okay, so yes, Amazon is part of the Super 6 for now. How about Meta? All-time high. Super 6. I did trim at 502. Had to do it. It was to be disciplined. All right, it was like, I think my trim price was 502.03, something like that, something. But it keep going higher. But definitely part of the Super Six, right? So nothing to do there, not chasing. Now Google is not in the Super Six, so it's reduced to the Fabulous Five. Okay, so we knocked two out. Google is not. Now I sold Google spread last week down here in the 132, and I sold one going next week as well. So I will keep selling put spread below using the 200 MA as my last line of defense, right? But right here is a zone of defense, right? You can see it reference low a couple of times. So yeah, and it's barely clinging on to the 100 MA. So I didn't feel a need to add to any more Google because I don't mind buying down here. I saw a put spread at 131, so right below it. So hey, if it get down there, I don't mind adding 100 shares of Google down here, right? So, but it's definitely not part of the Super Six anymore. So now it's down to the Fabulous Five. Google weak like Apple. Of course, Nvidia crushing it, right? I tripped. All the share that I bought on the earning dip, it's out, right? Wow, crazy, crazy, right? So it is what it is. It's out. I still have shares I bought way down here. That's fine, but all the shares I bought on the earning dip is out. That's fine. I am okay on taking profit there, but Fabulous Five right there. Tesla is where the Fabulous Five become the Fantastic Four because Tesla is not Max 7, okay? So yes, right now we just have Fantastic Four. What to do with Tesla? What would you do here? It's in the middle of nowhere, okay? For me, it's not a buy or sell. If it come back to the 20 MA, it might be worth going long just to see if that's going to hold and ride it. But you can get, let's say 192-ish. This potentially a $15-20 move. That's not a bad deal, right? If you want to do a quick trade on Tesla, you can even do a call spread, doing like a 185, 205 call spread, something like that, to be long on Tesla. But for me, if they get down to the 20 MA, I might consider go long again. But for now, it's kind of in the middle of nowhere. Okay, no man's land between the 20 and the 50. Yeah, it's plus you see the gap fill right there. Okay, that's the gap fill, and the way it behaved, it's just like sellers couldn't wait to get out. Okay, so people are selling just below the gap fill. They just want to get out. Volume is pretty heavy too. So yeah, it doesn't look good. Okay, so for me, it's definitely not part of the Max 7 or Fabulous 5. So no, no, it's just be patient if you want to go long. Buy something a little bit at the 20 MA would be the best thing to do, right? All right, let's move on from Max 7. Let's focus on pharma next. Okay, so yes, Amgen was a pain in the butt. Okay, in hindsight, 2020, I should have left those two put spread alone, and they would have been winning trade. But I took two losing trade by closing a 277.5 and a 275 put spread uh, early part of the day. That's all right. I had been flirting with disaster with Amgen for literally over a month. I've been selling put spread, and on this move here, okay, on this move here, I sell put spread, start out at 282.5, and I was lucky to escape that. And then of course I did 280 a couple times and got lucky there because it was able to hold. And then finally after 4 weeks it started to do this, and yeah, The one thing that my mentor told me many times in the beginning of his mentoring me was traders will do will keep repeating something until it stopped working. And to me, Amgen was at that point where falling out of the channel is a bad thing. I talk about this, okay? You don't want to be out of the channel, regardless of the fundamental. Technically, it's an unhealthy thing. Can it can is it unthinkable that something happened with Amgen for whatever reason that it come down to the 200 MA? No, it's not unthinkable. That's why I did not sell any put spread next week. I decided, hey, it was working so well for 3-4 weeks in a row. Yesterday was the first time that it went against me, and I said, okay. Luckily, I have a bunch of put spread below that made money, so net it was not a bad trade altogether with Amgen. But no, going forward, let's just be patient to see what it's doing. Is it gonna base and then get back into the zone, or is it going to drift down to the 200 MA, wherever that is? Okay, the 200 MA is going to keep on rising. In 2 or 3 weeks, it might get up to that 270-ish level. So we'll see. Okay, so now I hit the pause button on trading Amgen. Technically, it does not look healthy. FV looking good. I had a buy order at the 20 MA, and I did add. Yeah, okay, I like FV here. If you want to sell put spread, I do 170, 165. Okay, would I buy FV on a big pullback to the 50 MA? Yes, yes, a big yes. So be patient. I'm adding small, selling put spread, big order down here for FV. Okay, that's the play on FV. JSK, same thing. Adding, put spread, back up the truck. Very similar chart, right? Because we had the breakout, right? Breakout over a long time resistance. Like it. Both JSK and FV are good stuff for me, okay? Let's see, what other pharma should we talk about? Of course, Eli Lilly. I still have some shares. Would I trim if I see 800? The answer is yes. But until then, it's all right. Okay, I have very few share left. I have trim. I get it. It's eventually that gravy train is gonna end eventually, right? Um, let's see. Let's talk about small pharma, biotech. Now I did add a little bit, repurchase Argenex, and I did sell yesterday. The share I restock on this big move to the 20 MA. I got out. I take my quick profit. Okay, it's a great, very volatile trading stocks. So buy small, sell fast. Be light on your feet. I still have 1/3 of my CYTK. I trimmed 74 to 75. Yeah, take some profit there. And would I trim again if I see 76? Heck yeah. If I see anything above 75 to 76, the last 100 share will be blow out. Okay. Yeah. The 20 MA is likely going to be a resistant selling area as it has been. But in a week or two, it's going to come down to the key support zone right here. Right. And yeah, I think buying at 72, sell 75. Well, above 74 is trimming time, right? And then of course 76, 77. Yeah, if you, I don't think you're gonna see 80 for a while unless some big news with some kind of new drug, phase 3, phase 2, whatever. But for now, be light on your feet. I have nothing. I sold out on RCKT because it is banging on the upper range, so no need to be in it. Would I buy back? Yeah, below 29. Anything in 28? Yeah. 27? Heck yes. Okay. 26? Nope. Load up, load up, and then if it's not that we can see, I don't see it why it would come down to the 25 level, but if it does, buy a whole lot, right? Let's end the biotech on Alnylam. I added at 151. So for now, yeah, it's okay. It's would I add more below 145? Yeah, I will add more all the way down to the 52-week low, or even down here channel low, right? There's a well-defined channel low, so I have small amount of share. Okay, small amount of share. The big order is 141. All right, that's the big order. 141, 42, 143. So I have more orders between 145 and 142. And yeah, it's in the buy area, right? All right, let's move on. The banks. Goldman Sachs still banging. Okay, it's not a bad thing, but tough here. Okay, if it can move, if it can cleanly break out and keep on going, then you have a breakout like you see with AbbVie and JSK. But until then, it's a no touch for me. Okay, it's in a zone where I don't want to short, I don't want to be long either. I'm watching it to see if there's gonna be a real breakout or a breakdown, right? You know what? It's been consolidating. If I had to make a bet, I think it will break out. But because the general market is so high that it's hard to go bullish on Goldman Sachs when the general market has been up 20 to 25% over the past 4 months. So has Goldman Sachs. Look at this big move since October low, right? Yeah. So it's hard to be bullish, super bullish there. But TA is looking like a coil spring, ready to break out. So if you want to gamble, do a call spread. Do something like 380, 395 kind of call spread, going out a couple weeks. That might be a decent play. I like Morgan Stanley more. I've been selling put spread there. Would I buy share? Yes, I will. I have ordered in at 85, and I have not bought any share yet because it has not really get down yet. But between 85 and 84, yes, I got ordered in at the 200 MA. Okay, that's where I want to buy the bulk of my share. But I do have initial order in at 85 all the way down to down here, and I don't have any order down in this 82 range, but I might put in some order down there too, because on the market pullback, can I see Morgan Stanley come all the way down there? Yeah, in the 82, but that is a buy. Okay, so I like Morgan Stanley more than Goldman Sachs. JPM, which I have 2 bear spread that is losing money, and it might be, well, I have 2 more weeks for them to either work or fail. It is what it is. Okay, I put them on 2 weeks ago in this area when it was 185 ish, but doesn't look good. Not right now. Okay, so it is a losing trade. I like Bank of America more. Would I add to Bank of America on a pullback below 34? For now, the answer is yes. I have ordered in at 33.5. Okay, I would sell naked puts at 32, like I did last week. AXP, I have a bear spread there as well. Also, slightly losing money as well. It was I believe it was 217, 210, something like that. That was my bear spread. So yeah, nothing to do there. Could be a losing trade, but AXP keep pushing higher. Now the one that I did not put on was COF, Capital One, because I already have 3 bear play. If I didn't have any exposure to JP Morgan and AXP, I would go for a COF bear. Depend on what happened in the next 2 weeks with JPM and AXP and those bear spread expire, then I will look to put on something for COF in the 137, 138 range. Hey, if we get back to 140, even better, right? So I'm not bullish on the credit card player for obvious reasons, especially AXP and COF. Alrighty, okay, let's move on. So we'll talk about the banks. Done there. Let's move on to energy. USO. Yeah, I couldn't short it. I discussed it. I had planned to short USO for a while at 74, and then over the past week or two, I watched how the dollar strengthened, and I said no, it's safer to not do that. Okay, it filled the gap, right? It filled the gap up there, and can it get into the 78 range? You don't want to see that. Okay, you don't want to see that because that would be inflationary. It's not a good thing. Okay, if trust me, it's a bad thing. The last thing you want to do is you have a weakened economy, and yes, we do have a weakened economy. If you follow the economic data is mixed, but it mixed on a downward path, right? So the last thing you want to do is CPI to start rising because energy is rising, because it forced the Fed to not be able to cut rates. So no, it's a bad thing. We already have weakened housing data the past couple of weeks because mortgage rate is back to 7%. Okay, jobless claim is continuing to crawl higher. There's a whole lot of things that it doesn't look good. Okay, it doesn't look good. That's part of the reason why TOT behaved the way it did. But it's still not pointing to a rate cut in May either. All right, so energy. Now I did trim Shell Exxon. Okay, obvious reason, right? Gotta do it. Okay, you have multiple things here. You have you have that, and yeah, this is the range where the gap fill, right? There's a gap here, and it got hammered here. Now, if USO stays strong and keep going higher, like I said, into the 78, 80 range, then yeah, can I see Exxon get back into the 110? I will sell the rest up here in the 110 range. I still have Chevron. Okay. And it is in that zone. See, look. This is where the gap down is. Right? Is that a surprise that it's dancing around this? Last time it got there, massive sell-off. This time it's dancing around, absorbing. Okay, it's absorbing sellers. Can it break out? It could. Okay. If it break out, then maybe we see 158. Maybe. Can we see 162? Maybe. But what's good for Exxon and Chevron is bad for TOT, bad for CPI, bad for a whole lot of things. So, yeah, trust me, you don't want. I'm not rooting for this, right? I have a small position in XOM and CVX. I'm not rooting for this because this is bad for the rest of my portfolio. To be blunt, okay, if you're bullish on energy, surely you can't think that the Fed is going to cut rate, right? As far as the other stuff, I've been watching LNG, natural gas. I was looking. I was looking, getting ready to do some kind of option play, and then it bounced. But yeah, channel low, right? I'm watching it. If it get anywhere down to the 150 range, LNG, yeah, liquefied natural gas, right? I was not bullish here, but I'm turning bullish down here, right? Turning. Um, that is that. So let's talk about Met device. All right, Medtronic. Here's the thing with Medtronic, right? I like Medtronic breaking out over long-term resistance, but at the same time, you have this problem right here. This is why I'm not as crazy about Medtronic compared to, say, GSK or FV, because there is a channel high situation here, or upward trend. So it's not a surprise that it's having problem here. Okay, that's a long term. See, look, that's this line right here, the channel. Okay, so if you can break it, good thing can happen. Okay, but it need to break it. For me, the easier to go bullish up there, right? But it's a whole lot of yeah. It's like I said, it's not bad, but at the same time, it's not as attractive as other play as far as a breakout. Okay, EW I think is more attractive, but it's also breaking down from the 20 here. Okay, so that's not a good thing. I have trimmed a lot. I have a stop in where? Where's my stop? 83. Okay, so it's I'm not gonna give up this big move. Okay, basically 83 is like halfway of this big move. Sometime on a big candle like this, I put a stop like halfway. It's kind of lined up with almost a low of there than the right that you see right here, which is 82.53. But my stop is 83. Okay, I'm not gonna let it go much lower because that's too much gain. Too much gain from this breakout to give up. Would I buy back below 80? Maybe. I would more inclined to sell a put at 75. Okay, down here. Should I get stopped up? Medtronic, struggle. I like Medtronic, but it needs to hold the 200 MA here. Okay, it needs to base here. Other than that, it's not much. I mean, it's the sector is not as healthy as I wish. Right? It's money is chasing other area. At the end of the day, the fundamental of these companies are not bad, but there's only so much money out there chasing Max 7 or Fabulous 4. Not much you can do, until the rotation come back. There's nothing you can do. And then, since we talk about Met device, I can talk a little bit about the diagnostic area, which I like a lot. DGX, I have more order below here. Between 123 and 120, I'm looking to double my current holding, okay? Because trust me, I bought down here, and then I was rewarded nicely, and I'm looking to replay. Sure, I bought half my position so far in the last couple of weeks, last month or so, but I do plan to double up down here for another nice 15-20% run. Yeah, I take the 15% return if that happened, right? And I think that is about it for this weekend. Um, Good luck. Hopefully, I cover enough, and see you on Monday.